Today is Sunday, September 28th, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these updates every Sunday, so if you want to follow along, go ahead and hit that subscribe button, and let's get into it. Since my last update, Pershing Square had a loss of 2.8%, my portfolio had a loss of 1.08%, and the S&P 500 had a loss of 0.31%, which brings us year to date. Pershing Square is at a gain of 28.8%, my portfolio is at a gain of 26.13%, and the S&P 500 is at a gain of 13.31. If we take a look at the events for this week, you'll see that every single day is at least going to have one scheduled event. We start things off on Monday with pending home sales. Tuesday, we're going to see job openings along with consumer confidence. Wednesday is going to bring us the ADP employment report, and Thursday is going to bring us the initial jobless claims. And then we're going to wrap it up Friday with the employment, the unemployment, along with the hourly wages report. I'm going to say that all the events on Tuesday through Friday are going to be the most important, with Monday's pending home sales being the least important. And then for the companies that are reporting earnings this week, on Monday we're going to get Carnival Cruise Lines, and then Tuesday we're going to get Nike along with Paychex. None of those three companies are currently in my portfolio, but it is important to know when companies do report. And since my last update, I did decide to increase all of my positions by 10%. These are going to be all 14 of my current positions. Right now, Nvidia, Microsoft, Palantir, Meta, and Welltower make up my top 5, and those make up 43.94% of my portfolio. So after investing 10% across all of my positions, that now puts me at 91.1% invested, leaving me with 8.90 sitting in cash. I do think that if I increase any of my positions again, it won't be the same across the board, and I might increase some holdings individually. If we take a look at the SPY chart, you'll see that Monday and Friday were the only positive days on the week, and we took a bit of a slide during the middle, and it ultimately closed 0.31% lower on the week. The SPY, however, is still quite a bit above the long-term green trend line I've been referring to over the last few weeks. This week, the SPY would need to see a decline of roughly 2.66% to come back down to that level. If we add in the 5 and the 15-day moving average, you'll see that on Thursday, the SPY price actually dipped below the 5-day and got to the 15. It did rally some on Friday to close out the week, and right now the SPY price is just slightly above the 5-day, but both of those still are above the 15. Before the SPY price closed at the 15-day moving average on Thursday, we had spent 16 consecutive trading sessions without that happening. So for this week, I wouldn't be all that surprised that the SPY price once again does close below the 15-day moving average, but clearly there's a bunch of strength in the markets right now, so I wouldn't expect that to last any longer than a day or two. And I do think that the markets are going to close this week higher than how they started them. And from where we're trading right now, we would only need a 0.79% increase to go back to the old all-time highs. So it would definitely be nice to have most of the economic events this week come back good, and I think that if that does happen, reaching the old all-time highs is definitely possible. That's going to do it for today. I do make these updates every Sunday, so if you want to follow along, go ahead and hit that subscribe button, and I'll catch you next Sunday.